Focus. Ideate. Innovate. Enable. ICICI Lombard and CNBC-TV18 present India Risk Management Awards, honoring the new age risk management practitioners.
Hello and a very warm welcome to the 9th edition of India Risk Management Awards presented by ICICI Lombard and CNBC-TV18. The most anticipated event that honors noteworthy organizations for their outstanding contributions in the field of risk management is here. For almost a decade, India Risk Management Awards have been at the forefront of celebrating excellence in risk mitigation. This evening, we honor and recognize Indian companies that champion risk management and lead the way by embracing new age risk management practices. And now to set the tone for the evening, I would like to invite Mr. Bhargav Das Gupta, Managing Director and CEO, ICICI Lombard General Insurance, to deliver the welcome address. A big round of applause for Mr.
Risk management is now an important topic of discussion in boards. Today, boards, along with focus on investments and growth, also talk about risk management, risk mitigation strategies, scenario planning, business resilience, supply chain diversification, and whatnot. And that's a good thing, because we've always believed that you have to look at business in a balanced manner, protecting your business in terms of risk management, mitigation plans while you plan for growth. Now, as you know, at ICICI Lombard, we've believed for a long time that insurance is not just about risk transfer. It is about partnering with our corporate clients and our retail clients in mitigating those risks. And over the last couple of years, the discussions that we have had with our corporates, we are seeing this change happen in India Inc. There is a lot more awareness and consideration for risk management tools that are prevalent and possible today. Today, we are here to celebrate the successful risk managers of the country, people who've taken the leadership in this journey. And on behalf of the entire team, CNBC and ICICI Lombard and Frost & Sullivan, it's my great pleasure to congratulate each one of you and wish you a fantastic journey through this journey of risk management that you're going on. You know, while last 3 years have been, as I said, a bit more difficult in the context of global uncertainty, we believe at ICICI Lombard that we are at a great space in terms of opportunity as Indian enterprises. In the world of global uncertainty, I think India looks to be a one unique, shining outlier. The real big risk that businesses run is the risk of not growing, the risk of not grabbing an opportunity that is in front of you. And that is what we believe in ICICI Lombard, the time for Indian enterprise to focus on. I'm very confident that all of you, my friends, will be leaders in that wave of change. We will see people innovate on managing risk, and we will see risk to be perceived as more as an opportunity rather than a challenge. Risk will stop feeling like a scary four-letter word if we embrace this gauntlet. Thank you.
All right, now ladies and gentlemen, to deliver the special address, please allow me to introduce you to a towering figure in the world of finance and business, none other than Mr. K.V. Kamath. So we are very, very happy to have you here, and in gratitude, really. So let us all give a very, very warm welcome to the man who has been a driving force behind some of the most significant financial institutions in India and the world. Welcome, sir.
This function which celebrates risk, managing risk rather than risk. What's happening around us and my take on that. I think there are several things that are happening. All are happening in parallel. But I want to draw on one lesson from this, which is, I think, very important to all managers, and for me was an eye-opener. This is about 3-4 months into the COVID situation, when companies were allowed to reopen. The first 3 months was, we were all in shock because except for essential goods, nothing was open. So when things opened up, I talked to somebody that I know from the south, who the group is in auto ancillaries, and I said, "How is business? Are you back to what level of production?" They said, "Discount, we are back to 100% capacity." I said, "Very good." I said, "But all your employees, I don't think they are back on the shop floor." He says, "No, we're only about 75% back in." So I said, "So how are you producing 100%? He says, "Basically re-engineering a few things, process changes, technology, and so on and so forth." So I said, "Then are those people going to come back?" He said, "No, they will come back when we expand." So basically, what I just heard was there's a productivity gain, whatever number that you want to put, is it 25% or whatever productivity gain. And the very next set of P&L and balance sheets that I saw at the end of the quarter on money control, which is where I scan what is happening on a continuous process. I'll start doing it from maybe tomorrow or so, as to see what is the quarter-on-quarter growth in terms of a set of companies. EBITDA improvement, it was 25%. And thereafter it held for a very long period of time. What I'm trying to say is that adverse event was then harnessed into something very productive and made into a gain in terms of... So you can engineer what appears to be an adverse event and re-engineer it to serve you better. And in the industry, I think, clearly, I would like to salute them for doing this in those adverse times. The stage, I think, is set for, I would say, growth in the country, driven both through domestic demand, which is robust, and through what I would call involuntary global reshifts that are happening. And reshifts are certainly happening. I think anybody who's buying from a single source today has realized the risk of betting on a single source, and that reshift is happening. And I think proactive steps have been taken by our government to make sure that we are an attractive destination for such reshifts. And also, I would think a whole lot of indigenization or indigenous production of what we hitherto imported, for example, defense equipment and so on. So all these, to me, means that on the manufacturing front, you have a runway which has now been prepared for continued growth. So I'm a firm believer that we have a 25-year runway, because to add to that, then you have the entire piece in terms of infrastructure that is yet to be built, urban rejuvenation that is yet to be done. And of course, you can go down to rural India and rebuild the cities and the towns and the villages. It's an opportunity that will continue for a long time. All you need to do is look around the world as to when change has happened, how long did it last? It lasted over 25 years. I think we are into our early days as yet. So we have a long runway of growth to sustain. Today, if you look at China, I would think about 35 to 40% of the GDP is really digital. Digital contributes 35 to 40% of GDP. Now, we, I think, are in mid-single digits at best. So we have, with all that is happening, the new businesses coming on, all the things that are happening, whether it's the India stack, whether it's the adoption and straight through and so on, that's happening here, and the sheer number of startups in this space. My view is that we will get to between 20 and 30% in the next 5 to 7 years of the GDP. So if your GDP is growing at 6-7%, maybe 8% as forecast, and you take another 20-25% of that as the digital piece, I think we are near double-digit growth. So we are going to be near double-digit growth for a long period of time. So I can see that if it is double-digit of growth, there is a whole lot of investment activity that is going to be required all over again in manufacturing, in infrastructure, in every single utility that you can think of. There is going to be a rejuvenation of demand that will happen. So I would think the India story is intact, driven by all these positives, as it were. I put technology as a risk because if we do not comprehend what is happening on the technology front, we run a risk of probably being made in a very short period of time redundant in terms of what we do. Because if every 3.4 months you got a price performance equation which is changing, your technology has to be agile and nimble enough to be junked and repackaged into something different. And this is going to affect everybody. It is not just a player, one sector or not. It's going to affect everything that we do. So I think we have very interesting challenges. It can be done, I'm sure. And if you look around, the 80,000 or so digital startups that are there, I think are living this dream. They are all working in technology which 5 years back probably did not exist. And I'm sure they are nimble enough to say that they can redo the things in the next few months if they need to junk what they have. They have different problems. I don't want to go into their challenges. I think I may broadly mention it, and I hope what I see doesn't come through, because whatever I've seen, brilliant platforms have been built. But the challenge has been that you don't have the underlying cash flow that you need to sustain yourself into the future, and that could be a problem. I'm not talking of a sector or B sector. I'm talking of across the, what is it? It was last count was 75,000. Maybe today there are 100,000 startups. So I think that sector needs to understand that good platforms is just the beginning. You need to make sure that you have sustainability and endurance into the future. Incumbents will have to look at how do we reinvent ourselves. So the ability to change, I think, is going to be a key factor in whatever we do. In the sense, and one test, I would say in a risk management practice, I would put in is, what is an organization's internal ability to change? I don't want you to do that rating here. You can do it for yourself on a 10-point scale. How agile, nimble are you to change? There is a need to reinvent ourselves. Reinvention is possible. It is not easy. But, we need to, by doing that, we de-risk. But I'll conclude by saying, I think there is globally turbulence beyond a level which I would have seen in my entire career. In India, we have managed to insulate ourselves very well. I will use the word very well, not just well. And again, thanks to the leadership that's been shown by both the government and the central bank as a regulator, as a monetary policy authority. I think they deserved, and most importantly by business, because they have reinvented themselves. In all this, I have not talked about UPI, because that I think I need to weave into the whole technology space. I did mention it in passing as this. But this is again, there are two indicators of the new India. New India, and that's probably where I will stop. One is, look at where data is. We are the largest consumers of data, and we are the cheapest data available. And we are the most profitable in terms of getting this data out. Profitable. It's cheap and profitable, which normally do not coexist. So that has happened. And in terms of the entire UPI stack, so the reliability of data, the affordability of the device, that is the hardware that goes in, and the interplay of software in terms of UPI, along with, you can put it in an envelope of what I call the India stack, has made a product that is, I would say, very few countries have, at least in the Western world. I can't see anything equally, I would say, equal to it. In the East, maybe there are a few examples. But this is something that we can be truly proud of, because this all plays into this new India. A new India with a long runway, harnessing technology, getting products out, which are, I would say, the most easy to use, affordable, and ubiquitous in this sense. I think that is going to be the disruptor. And again, we need to look at how this plays into, in a positive way, in a risk containment way in our own businesses. I'll stop here. Thank you very much.
ICICI Lombard and CNBC-TV18 present India Risk Management Awards, honoring the new age risk management practitioners. ICICI Lombard and CNBC-TV18 present India Risk Management Awards, honoring the new age risk management practitioners.
May I please invite on stage Mr. Kamath? Mr. Das Gupta, Mr. Arup Zucchi, Global Managing Partner and Executive Board Member, Frost & Sullivan, to unveil ICICI Lombard Corporate India Risk Index.
ICICI Lombard Corporate India Risk Index 2022.
Many of you have actually heard about the ICICI Lombard Corporate India Risk Index, but a few of you who may not have known about this index, I just want to give you a clear message, and that is, this is definitely one of the most unique indexes. It's very robust. It's a very, very scalable index, and it's one of its kind. Nowhere in the world we have seen a risk index being measured the way it is being measured under this framework. And if you manage risk well, you put your company in a position of maximizing their future growth potential. So in this particular case, what we've done is we have looked at roughly about 32 risk elements along the 6 dimensions. And the 6 dimensions include market and economy, operational and physical, technology, which is now pretty much impacting every industry all across the world, crime and security, natural and hazard environments and events, and strategic risk factors. So those are the 6 dimensions under which we looked at about 32 risk elements. And for companies who are able to manage this successfully, you can see what the positive impact they can have on their financial performance, long-term survival, as well as thriving in their various sectors. We measured this risk exposure and risk management along 4 parameters. And they include awareness and probability when you look at risk exposure. And when you look at risk management, it's criticality and preparedness. So how well do you prepare yourself? And risk index is actually a function of risk exposure and risk management. What we have found in 2022 as compared to 2021 is that the India Risk Index improved by 1 point. Now, 1 point doesn't mean 1%, but it is a significant increment and improvement in terms of how corporates in India have done. We did the survey with about over 200 companies. We looked at almost 20 sectors. So this is a huge, massive exercise that we undertook to measure the performance of various sectors. When it comes to the risk management, I think one thing you've seen is more and more companies, more and more corporates across the 20 sectors are a lot more aware of how and what they need to do to manage their risk. What we are also seeing is there's a lot of focus on operation-related risk. People are focused more on those. Many of the sectors are also looking at market and economy risk a lot more than in the past. And that is why if you look at the total risk index, it has moved up by about another point from 62 in 2021 to 63 in 2022. So good improvement, but I do believe there is tremendous scope for further improvement. I think the one that's most outstanding here and the biggest improvement is the telecom sector. And in there, what you see is their heavy focus on technology risks. Because they manage the technology risk, which is one of the key risk dimensions, well, they scored very high in the overall risk management. We also saw the same with FMCG industry as well, or sector as well. They focused on technology quite well, and they were able to move up the chain quite a bit. But when you look at pharmaceuticals, healthcare delivery, and automotive ancillary, you look at supply chain and management of the supply chain and the strategic risk elements a lot more. And that's where they have been able to be in the first top 5 within this system. When you look at tourism and hospitality, obviously after COVID, these industries have come back quite nicely, and you're beginning to see tremendous progress being made in this sector. And massive learnings have happened during COVID when everything shut down, and this was the most affected industry among all the sectors in the world. Same is true with BFSI, more or less flat between 2021 and 2022. We see them relatively flat. But what is interesting is aerospace, defense, and the educational skills sectors have seen a big improvement. What we are finding is because of new initiatives and regulatory frameworks introduced by the government of India, we see both these industry sectors doing relatively well, and therefore their risk index scores have improved quite a bit in this category. When you look at risk management, you find the traditional companies doing a lot better compared to the new age companies. And when you look at the risk index overall, the traditional companies far outperform the new age companies. When you look at the same data from a company size standpoint, whether you look at large enterprises, medium enterprises, and small enterprises, obviously the risk exposure profile also changes. The larger the company, the greater the risk. Smaller the company, smaller the risk. Likewise, when you look at risk management, because they have a lot more resources available, you see their risk mitigation strategies, management strategies a lot better when it comes to large enterprises or small enterprises. Large enterprises risk index is obviously higher compared to small enterprises in all the various sectors that we discussed. COVID taught us for companies that had done some simulation, built-in digital transformation strategies, came out very strong in one of the toughest crises that we have seen globally. But those that were not prepared met with their fate very, very strongly. Building some very robust processes, systems is vital, because if you have the if-then scenario in your systems and processes, you can basically handle, manage, or at least reduce the impact of any risk that is out there. When it comes to leadership, one thing I can also confirm very proudly, working with clients in this part of the world, that risk management is now a corporate agenda item. It is being discussed at board levels, at corporate meetings, and that's good news. It's when you begin to pay attention to it, it becomes an important metric of performance, and what we always believe, what gets measured typically gets done. My last message is we are, as a country, moving in the right direction, so congratulations and best wishes to all the corporate leaders in this part of the world. Thank you very much.
ICICI Lombard and CNBC-TV18 present India Risk Management Awards, honoring the new age risk management practitioners. ICICI Lombard and CNBC-TV18 present India Risk Management Awards, honoring the new age risk management practitioners.
Hello and a very warm welcome to the 9th edition of India Risk Management Awards presented by ICICI Lombard and CNBC-TV18. This evening, we honor and recognize Indian companies that champion risk management and lead the way by embracing new age risk management practices. It's time to honor and felicitate the new age risk management organizations who have developed best-in-class risk management practices and capabilities across business categories. Now, in its 9th year, the Risk Management Awards recognizes those organizations who have significantly added to understanding and practice of risk management. In this edition, we feature the large, mid, and small cap segments. Let's start with the first set of awards for the evening, and to present the same, may I please invite on stage Mr. Kamath, Mr. Das Gupta, and CNBC-TV18's Managing Editor, Shireen Khan. Ladies and gentlemen, we will begin with the large cap segment, and the first category is Masters of Risk Private, and the award goes to Tata Consultancy Services. A big round of applause for the first winners of the evening. Moving on to our next award category, which is Masters of Risk PSU. And the winner is ONGC Videsh. Our next category for the evening is Masters of Risk Agriculture. And the winner is Godrej Agrovet. Moving now to the next category, which is Masters of Risk Auto Ancillary, and the winner is CET. A big round of applause for Team CET. The next category is Master of Risks Automotive OEM, and the award goes to VE Commercial Vehicles. Next up is the category Masters of Risk Banking, and the winner is Yes Bank. Moving to the next category of the evening, Masters of Risk Capital Projects and Infrastructure, and the winner is Prism Johnson. Our next award category is Masters of Risk FMCG, and the award goes to Mondelez India Foods. Well, analyzing, mitigating, and calculating risks are an everyday chore for the healthcare sector. And our next category is Masters of Risk Healthcare and Pharma. And the winner is Dr. Reddy's Laboratories. Our second category now, moving on, is Master of Risk IT/ITEs, and the award goes to LTI Mindtree.
ICICI Lombard and CNBC-TV18 present India Risk Management Awards, honoring the new age risk management practitioners. ICICI Lombard and CNBC-TV18 present India Risk Management Awards, honoring the new age risk management practitioners.
And it's time now for our next set of awards. We continue the awards in the large cap segment. Our next category is Masters of Risk Metals and Mining. And the winner is Tata Steel. Next up, we have a special jury mention for risk management in metals and mining, and the winner is Hindustan Zinc. Moving on, the next category is Masters of Risk Power, and the award goes to Tata Power. Effective risk management strategies can help ensure the smooth functioning of telecom infrastructure and minimize the negative impact of unforeseen events on business. The next category is Masters of Risk Telecom, and the winner is Indus Tower. We now move on to the specialized verticals in the large cap segment. The first category is Masters of Risk in Business Continuity Management, and the award goes to Tata Consultancy Services. Up next, the category is Masters of Risk in Regulatory Compliance, and the winner is Marico. A big congratulations to you. The next category is Masters of Risk in Fraud Prevention and Ethics Management, and the winner is VE Commercial Vehicles. Moving to our next category, Masters of Risk in Risk Governance, and the award goes to VE Commercial Vehicles again. The next category is Masters of Risk in Supply Chain Risk Management, and the winner is Hindustan Unilever. Masters of Risk in Brand and Social Media Risk Management is the next category, and the award goes to Marico. Our next category for the evening in the large cap segment is Masters of Risk in Environmental Social Governance. And the winner is Hindustan Zinc. Up next is the category for Masters of Risk in Business Model Adaptability. And the winner is the Indian Hotels Company. The second last category in this segment is Masters of Risk in Risk Technology. And AU Small Finance Bank wins the award. And the final award category in the large cap segment is Masters of Risk in Cyber Security. And winner is Tata Consultancy Services. Moving on now to the mid and small cap segment, we'll start with the mid cap segment. The first category in the mid cap segment is Masters of Risk Private, and the winner is Avendus Capital. FMCG companies operate in a highly competitive and dynamic environment, which exposes them to various risks. And our next category is Masters of Risk FMCG, and the award goes to Agrotech Foods. Congratulations to Agrotech Food team. They are not here with us because of prior commitments, but let's give them a big round of applause. For the next category, which is Masters of Risk Real Estate and Infrastructure, the award goes to Tata Consulting Engineers. Masters of Risk in Environmental Social Governance is the next category, and the company which stood out for the jury is Gati Kintetsu Express. All right, next up, the category in the mid-cap segment is Masters of Risk in Risk Governance, and the winner is NSC Clearing. Moving on to the next category, Masters of Risk in Cyber Security, and the award goes to Bombay Stock Exchange. I would now like to move on to the next category of the evening, Masters of Risk in Regulatory Compliance. And the winner is Tata Realty and Infrastructure. Effective fraud prevention strategies can help mitigate the financial and reputational risks associated with fraudulent activities, while ethics management can help promote a culture of integrity and ethical behavior within the organization. Our next category is Masters of Risk in Fraud Prevention and Ethics Management. And the award goes to Shri Ram Housing Finance. The second last category in the mid-cap segment is Masters of Risk in Business Continuity Management. And the winner is Gati Kintetsu Express. And the final category in the mid-cap is Masters of Risk in Risk Technology. And the award goes to NSC Clearing. And now moving on to the small cap segment. The first category in small cap segment is Masters of Risk Private, and the award goes to Seth & Sons. Our next category is Masters of Risk Service Sector, and the winner is Matrimony.com. And ladies and gentlemen, the final category for India Risk Management Awards 2023 is Masters of Risk Manufacturing, and award goes to Vaibhav Global. Can I have all the winners now, one representative each from the teams, to please come on the stage and get a photo done.
ICICI Lombard and CNBC-TV18 present India Risk Management Awards, honoring the new age risk management practitioners. Focus, ideate, innovate, enable.